Hi everyone, Scott here. Going to talk to you about interest rates, what's going to happen with interest rates, because New Zealand and a whole host of other countries have been dropping their rates this year, and New Zealand has just dropped its rates for the very first time just last week. So I want to talk about what that means. Just out here at the beautiful Sydney Botanic Gardens, you can see here the water and the sun. Beautiful country, best country on earth. So NZ actually has just joined Canada, UK and other countries. I'll put this chart up. That they have actually dropped their rates. Now, NZ has actually cut its official rate from 5.5% to 5.25%. New Zealand went really hard post-COVID. When the inflation started coming in, they jacked the rates up a lot faster than Australia. Australia right now went all the way up to 4.35. New Zealand went to 5.5. They've been sitting there. And now that unemployment has increased, check out this chart for the NZ unemployment. And because they're starting to slow on the economy, and they're starting to see a few cracks there, what they've actually done is actually started moving into their easing cycle. Easing cycle just means they've had a cycle where rates have gone up, they've sit at that plateau mark, now they're starting to bring them down. So it won't just be one cut down, there will be many. Now, how many they have and where they eventually get to and how fast they do that, that remains to be seen. But what's actually really good is that New Zealand's inflation has dropped from 4% first quarter of this year to just 3.3% this last quarter. So their inflation is on track. Now, New Zealand joins Canada and those other countries, as I did say. Australia is yet to enter its easing cycle. We're sticking at 4.35%. There was some talk that we would increase the rates because the inflation didn't really come down all that much as New Zealand's did. But in fact, what we're starting to see is we're starting to see the economy slow here in Australia. We've had pretty much zero GDP growth. We've seen unemployment this time last year at 3.7%, now up to 4.1% last month, 4.2% this month. And we don't really want unemployment to get above 5.5%, 4.5% is ideal. So we're starting to get very, very close there. And then if you look at our inflation, it is slightly coming down. Check out this chart. But it's not all the way down to where it needs to be, which is below 3%. But we are on track, broadly speaking, we are on track to what the RBA does expect. Now, Michelle Bullock has come out and said again, just today, it's way too early to talk about rate cuts.
Based on what the board knows at present, it doesn't expect it'll be in a position to cut rates in the near term.
Defying market expectations of an interest rate cut by Christmas.
I do understand that this is not what households want to hear.
However, we're going to see more data on the 24th of September. 24th of September is when all the inflation data, economic data for Australia comes out. And then the RBA are going to meet on the 29th of September to decide what they do with rates. Now, if unemployment continues to go up, if we see inflation drop below 3.5%, then I think there's going to be a lot of pressure on the RBA to at least make one cut. They'll probably hold it, but definitely what I can say is that a rate increase is pretty much 100% off the table. We're not going to see it this year. Something crazy would have to happen for rates to go up 25 basis points. So we are looking in September at neutral, a hold, or 25 basis point cut. And then we will also potentially see another cut this year. Depends on these numbers that come out on the 24th of September. We now are going to enter the easing cycle as all these other countries have done, and New Zealand has just joined them. Now, what's interesting about New Zealand, I'll throw up their unemployment rate as well. Their unemployment rate has really increased, and their population is not growing as fast as us. Now, you can see here in this chart for New Zealand that what's actually happened is they have a lot of people coming in from overseas, but they've got a lot of people going out, and that is because the cost of living in New Zealand far exceeds that of Australia, and also the unemployment has gone up. So what's actually going on is Kiwis moving out of the country, going abroad, trying to find a better life, trying to find a better lifestyle, and trying to find a better income in Australia and other countries.
The latest Stats NZ figures revealing people are leaving the country in record numbers. Just over 130,000 left in the year to April, the highest number over 12 months. While the number of migrants coming into the country remains high, net migration has fallen in the year to April, below 100,000, down from more than 105,000 people in March's figures.
Already there, Maddie Hunter moved to Sydney a few weeks ago. Like so many young Kiwis, she dreamt of bigger opportunities.
Wasn't getting paid enough. Rent was too high. Cost of living.
So in Australia, we don't have that problem. And that's why you can see here the difference in the property prices, because if you look here at New Zealand, once we got through the peak of COVID, rates dropped to almost 0%. You can see here that their median house prices there jumped to about $925,000 median house price across New Zealand. I mean, that's insane. It's almost $1 million. Compare that now, they've actually dropped off to around that $600,000 to $700,000 mark. So they have dropped off once the rates got up to that higher amount. But Australia, it's very different. Now, our rates have not come down and our rates didn't get as high as New Zealand. However, we had a huge rebound in our prices. So take a look at the median house price here. It went up, it dropped back down, but it has come back. And the reason for that is we have a massive shortage. But the big difference between Australia and New Zealand is we do not have people fleeing this country. We've got people coming into this country. Now, this is the important factor that you've got to note, that as long as Australia maintains, so as long as we have that huge population growth, we're going to see property prices continue to grow. Now, interest rates falling, is that a good or a bad thing? Well, if you have a mortgage, interest rates coming down actually is a good thing, right? You're going to have more money. That will be great. It's going to take a lot of that pressure off you and the family. But interest rates going down is not what everyone wants, because if you take a look, for example, at people that are retired and have no debt, own their own home, well, they've got their money invested into investment vehicles which pay interest. And as those rates come down, the income of theirs comes down. They're not really affected by mortgages because they don't have one. They paid their homes off a long time ago. Also, people that want to get into the market for the first time and buy their first property, or investors that want to get their second, third property, rates dropping is no good. The reason for that is it'll limit your ability to get into the market, because once we enter that easing cycle, what's going to happen is property prices are going to take off again, especially in those affordable areas around the country and affordable suburbs and all of the capital cities, okay? So be wary, make your move, because we are right on the doorstep now, knocking at the door of Australia's easing cycle. Will rates drop this year? Maybe, maybe not. Will rates drop early next year? That's what everyone's saying. But we are definitely no longer in the upward swing. We are now in that easing cycle. Rates are coming down. Now, when they start to come down, they could come down pretty quick. That will be a very strong stimulus to capital growth on properties. So, guys, property is a really great place to be able to place some capital, some of your money, and ride it to a early retirement. What's going to happen with rates? Well, on the 24th of September, that data is going to come out, and on the 29th of September, RBA will meet. So there'll be more to come, guys. Like and subscribe. I'll keep you guys updated. Take care.